Welcome back. You're watching Indian Open right here on BloombergQuint Live. A quick look at the Asian markets. It's a mixed bag. At least it was at the start of the show. It still is. Nikkei is up about 0.5%, but Shanghai and Hang Seng not quite there. The SGX Nifty indicates a start, which is at about 11,670. Now compare that to the Nifty futures close of 11,630, and you're probably looking at a 35 point open, which is about 0.25% or thereabouts. So we might have a start which is positive. Let's wait and watch if banks participate. We'll probably have the auto companies anyways participate. Rusmik Oza, head of fundamental research at Kotak Securities, joins us right now on the show. Rusmik, good having you. Thanks much for taking the time out, and from all of us out here to you and your team, wishing you a very happy new year.
Thanks, Neeraj. Wishing you all, you and the team also a very happy new year.
Thank you so much, Rusmik. Well, it seems that we might actually have a happy new year for the auto companies. I mean, with this, the Gujarati calendar year as being the year, because the commentary, the performance and the festive season has added a glimmer of hope. The question is, Rusmik, is it too soon to place your bets, or would you take the bait and try and involve or invest some money, because no one can ever efficiently time when the actual recovery will take place?
Neeraj, among the auto pack, the Tata Motor looks quite interesting because of the beaten down nature and the improvement in the numbers which have come up as a surprise to many. And anyways, the company was doing a lot of cost cutting plus the promoters infusing money. I think these are some of the signs which can instill confidence in investors. We have a target of 200 on the stock, and I think a little bit of ease on the trade war should help improve numbers in China also, because China is the main trigger for JLR in terms of margins and growth going forward. So that's one key thing, and anyway, Europe is not going to do great for the company going forward. So that's one, and India business is quite mooted as of now, but going forward maybe it will take some time. CV business is not going to pick up so fast. But maybe the next few quarters, improvement in JLR followed by improvement in the commercial vehicle business somewhere in the next calendar year could be the key focus areas and scope of improvement for Tata Motors. Maruti, we're not very optimistic at these levels. Reason I'll tell you is because last year in 2018, when the stock had peaked out at around 9,700, 9,800, the stock was trading at around 30 times when the ROE was around 23-24%. Again, at current price of 7,400, stock is again peaked out at 30 times, but the ROEs have come down to 13%. So for 13-14% ROE, stock trading at 30 times, which is close to the previous peak, seems fully valued in terms of our assessment. We're expecting too much of too soon pricing, has got justified and priced in the stock. We're expecting some kind of form of correction in Maruti going forward. Maybe not the previous low, but somewhere around 65-6700 could be the next floor for the stock. In two-wheelers, Bajaj Auto looks the most promising because of the diversified nature of business. May not be so for Hero MotoCorp because it's a Me Too kind of product now in case of Hero MotoCorp. So these are the three pockets, mainly to focus on. But going forward, I think there'll be more scope for making money in auto ancillary companies than in automobile companies because the gravity of fall in auto ancillary is much more sharper than in the OEMs, and we've seen OEMs almost recover to a large extent, but most of the auto ancillary companies are still trading anywhere between 40 to 70% below their previous peaks. So from a valuation perspective, if someone has got a long-term view, I think there's more scope for making money in some of the auto ancillaries. Only one caveat is there, maybe you should avoid auto ancillaries which are linked to the engine parts, because there could be some uncertainty coming up because of electronic vehicles in future. So that's one space to avoid in the auto ancillary. Otherwise, I think there's a good scope for making money in auto ancillary companies going forward.
Since you are at it, Rusmik, I was going to ask that to you, but maybe you can clarify based on your research, which are the ones to avoid, which are the ones to pick. I think people will do their own research, but since you're mentioning that avoid the ones with engine issue or linked to the engine development or engine production, which are the ones that you would believe would be second or third in your preferred list, or maybe not in your preferred list at all?
Yeah, no, so we have certain companies which we cover, certain companies which we don't cover. Like there are companies like Varroc Engineering, Last year the IPO came, the stock from about 1000 rupees is available at 460, much more diversified in LEDs and wire harnessing business. A very diversified portfolio. Most of the business comes from overseas. India, it is more centric towards Bajaj Auto and two-wheelers. That's one company we like at this moment. Then there are certain other smaller names like Gabriel India, which makes shock absorbers, or FIAM Industries, which makes LEDs for two-wheelers. Then there are smaller names like Talbros Auto, Suprajit, Subros. These are some of the names to look forward in the auto ancillary pack. And if someone has a view that global automobile sales could pick up going forward, maybe as and when things improve in the global scenario, then Motherson Sumi also could be a good play. But as of now, I think Motherson Sumi is still, because of the steep fall in earnings, valuations still look on the higher side. So maybe one can probably look at buying in dips Motherson Sumi. But these are some of the names which you like in the auto ancillary space.
Okay. Well, that's a interesting auto discussion. I'm just doing one follow-up, maybe a bit too long, but Rusmik, just tell us, I heard you mention that your Tata Motors target price is 200. Now my question is, it's rallied 16% on the Murat trading session. We don't normally see that, a volume-based buying in an index stock on that 1 hour of trade, but it has done that, which means that people wanted to log on to Tata Motors. It might start off with a bit of a gap up today. So a lot of people who have looked at a price of 115, 111 or 120 might think that, oh, it's already rallied 25, 30 rupees and there's a further gap up today. Maybe I'll wait for a dip. My question to you is, would you be comfortable putting in fresh money to work even after the gap up open that we are likely to see today?
Definitely yes, Neeraj, because the way to look for Tata Motors is, one should look at from the peak how it is corrected. So from 450 rupees stock went down to 115, 120. When the price was 115, 120, if you break up the valuation on the SOTP, the Indian business was valued at 100 rupees. That means people are ascribing hardly 25, 30 rupees for the JLR franchisee. Now go back 2 years down the line, 2 years back, people were ascribing almost 300 rupees to JLR when the price target was around 450, 500 of the street. That time the price ascribed to JLR was between 300, 350, and the Indian business was valued at 125, 150. Today, there's hardly any valuation given to JLR. Maybe going forward in the next 6 months, 1 year, as and when Brexit fructifies, and if the company is able to sell the business to a bigger European counterpart, the real value could emerge, because when a strategic decision and a strategic buying happens, the true potential of the stock comes out, unlike the way market ascribes and gives valuation to the listed company. So our sense is there's too much of scope for improvement in the valuation and the pricing of JLR, which could be the trigger point. I think the stock probably somewhere should at least pull back to 160, 170. And then there could be some profit booking or correction coming at that place. Still a lot of scope for making money from the peak to the trough. If you look, there's huge scope for improvement in the stock price going forward.
Okay. The other one, of course, will be Reliance Industries, which will be in focus. We've done an extended auto discussion, lots of other stocks in focus as well, in which we need to talk about. So let's get it across to our research team huddle to try and talk about those. And then I'll ask Rusmik about how does Kotak view Reliance Industries as a stock because of the latest move that they have done. But Nikki and Sumit here to talk about the key stocks in news and the non-Tata Motors, non-Reliance stocks that are likely to react. Nikki, let's start off with the stocks in news first.
First up, we're going to be talking about Bharti Airtel, because the board meeting for considering the financial audited results that have been deferred to November 14. So we'd like to keep an eye out on that counter. The company says that more clarity is needed on the AGR matter arising out of the Supreme Court, and the company is also approaching DOT to seek clarity on the total amounts involved. Next on the list, we have InterGlobe Aviation, where it seems to be in a bit of problem. Regulator has warned the airline, and this time around, that the aircraft would be grounded if the airline doesn't change the engines of 16 A320 Neo within 15 days. So that's one development. And Piramal Enterprises and Shriram Group companies altogether, they're expected to be in focus, given that a Mint report suggests that Shriram Capital plans to merge two of its subsidiaries together, and this is expected to help the investors, which is Piramal Enterprises as well as TPG Capital to easily sell out their stakes. At this point of time, Piramal's stake is valued to be around 4,500 to 5,000 odd crore. Also, we are looking at GVK, given that the company has signed an agreement with Abu Dhabi Investment and few other funds for an investment of around 7,600. The proceeds will be used obviously to pay down their debts and also to purchase additional shares in the Mumbai International Airport. Talking about Tata Power, the JV has acquired a gas-based power plant and diesel generating station at Kalingalangar from Tata Steel, and the transaction is valued around 920 crore. Do keep an eye out on Hindustan Zinc, because that company will be coming out with the numbers out there. Top line, we're actually expecting a 4% decline. EBITDA margins too are expected to contract. Profitability is expected to be seen lower, as much as 15% year-on-year basis. Essentially, it's going to be lower realization along with on account of the lower prices and subdued volume to weigh on the earnings of this company.
Well, watch out for some of those names. Maybe a couple of stocks could have negative reactions as well. Amit, what else should one watch out for?
Well, a couple of stocks on the back of the brokerage upgrades that have come in. Firstly, HPCL, where Macquarie has maintained its outperform rating but have hiked the target price to 500 rupees from 375 now. They are seeing a material upside potential if there's a stake sale in HPCL by ONGC, something similar to what is expected to come in for BPCL, where government will be looking to divest its entire stake to a private entity. Now, because of this possible government divestment agenda, it might imply limited interferences going forward, which in turn will remove the major overhang on the valuations and the share prices of the company. Now, they have hiked the EPS estimates for HPCL by nearly 26%, as they're expecting higher margins going forward because of limited interference on the back of the divestment agenda of the government. The second one is on NMDC, where Citi has upgraded the counter to a buy from a neutral and have hiked the target price to 125 rupees from 95 rupees. Now, they're saying that the mining industry changes in 2020 will benefit the company, as there will be mining leases that will expire. Now, they're expecting the company to benefit from higher production and resilient prices due to lease expiries, and if the auction mines don't restart, according to the brokerage, and NMDC may be in a position to raise prices, says the brokerage. Now, they have hiked the net profit estimates by around 8 to 30% for financial year 2021 and financial year 2022 on the back of resilient prices and slightly better volumes that they're expecting.
Okay, we'll watch out for some of these. Thanks a lot for that, Nikki, as well as Somit. Maybe a stock in news first, Rusmik. We'll talk about Reliance in a bit. InterGlobe Aviation, and maybe the view on the aviation space, if not Indigo alone, the two listed players, because Indigo's commentary and the spate of issues surrounding it, be it aircraft, be it management issues, don't seem to be going away. After having a really good run, it's succumbed to some bit of selling pressure. Would you be a risk-off or a risk-averse investor out here?
I think one should wait out in case of Indigo and just give it a pass as of now, because what is happening is both the promoters, one has filed a petition in the UK, one is filed in the US. So we don't know actually where this conflict between the promoters is heading for. So that's one thing which is beyond the fundamentals, which is unpredictable. So the outcome of this, we don't know exactly how it's going to impact the minority shareholders of the company. So it's better just to avoid maybe InterGlobe. One can look at SpiceJet because there is no issue on the management and the promoter side, and probably going forward we could see maybe better numbers coming from SpiceJet because of its expansion and other aspects. But I think so clearly maybe because of the management issue, we would like to be on the back foot in case of InterGlobe, and just avoid the stock as of now, because we have seen in many of these companies, whenever these kind of issues prop up, we don't know how low the stock's prices can go and what the outcome can be in this case.
Okay, so that's the sum and substance of some of these companies. Maybe take one more question with Rusmik on Reliance Industries, Rusmik, because that's the big one, right? They've done this whole restructuring of sorts of their structure. All in all, a stock trading near record highs. Would you be buying this behemoth at the current valuations?
We would suggest one to accumulate Reliance. That's the best strategy. Because any dips, one should look at accumulating Reliance and spreading across the buying at least for next couple of months. We are extremely positive on the fact that there could be more value unlocking in the company. Reliance is one of the few old economy companies which is able to transform in a meaningful way and derive good value from emerging businesses like telecom, media, content, as well as retail business. I think going forward, these emerging businesses could be the key driver, and as and when value unlocking happens, the minority shareholders will gain a lot from there. And the fact that after many years we've heard the company saying that going forward they would like to be debt free, plus have strategic investments from foreign players like BP, Aramco. So it's going to be a very unique play going forward, and one should not miss on this investment opportunity in Reliance. So our target as a house is 1550 on the stock, but I think yes, in any dips one should look at having Reliance as a core stock in the portfolio going forward, because if the company is able to improve EBITDA by at least 15% and earnings between 18-20%, I think the stock could be easy 20% compounder going forward year on year for the next 5 years, and there could be one incremental pop up in terms of extra returns coming in whenever there is value unlocking in these businesses like retail and telecom. Plus, I think going forward, Reliance will try and actually replicate something what they've done in the telecom in the media space also, because of their various acquisitions of content companies, distribution companies. Maybe they could increase the foothold in the broadcasting business also. So it will be a nice package where they'll have value accretion in both telecom, because Jio has a lot of other value added stuff along with the telecom pure basic data and voice service, bundling of app and other aspects, and I think similar thing could play out in the media also. So very extremely looking at very exciting times for Reliance in the next 3 to 5 years. One should not miss out on the Reliance going forward.
Okay, well, so that's the sum and substance of some of the key stocks in news. Bharti Airtel, the news flashing on your screen, they've deferred the results. The board meet was slated to happen today and the results were slated to come out today. I think they've deferred the results to November 14th. There are a couple of reasons, of course, that they've said. There's more clarity needed on the AGR matter post the SC judgment, which maybe the company believes, or definitely the company believes, will impact the results. They're seeking clarity from DOT on the total amounts involved before maybe they talk about the commentary as well for the outlook ahead post quarterly numbers, and which is why maybe this move has been taken. Let's see. The stock's been very active. Let's see if there is some more action in the session today. But this is cursory. I really don't think that the street would want to read too much into it. They've given an adequate reason of why they are trying to do this. Okay, before we move to technicals full tilt, in a manner moving on to charts, it's 8:50 or 8:51, that time of the show when we get you our special segment Bloomberg Edge, where Yash Upadhyaya tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, good morning. What's the stock on your radar today?
Morning, Neeraj, and a very happy new year to all our viewers. IDFC First Bank is one stock to watch out for, and the proprietary Bloomberg indicator, which is the trend indicator, that is suggesting a positive signal on the counter. Now, like we always do, let's just try and understand what the trend indicator is. It basically uses the average true range for the purpose of calculation, and it helps generate a buy or a sell signal, and it also helps you manage your stop loss. How do you interpret it? You go long when the trend line changes its color from red to green, and you go short when the trend indicator changes its color from green to red. When does that happen? So, well, whenever the stock price moves above a certain level, where the trend line is triggered, it changes its color. Now, in the case of IDFC First Bank, the company, the lender came out with a decent set of numbers, and we have seen a positive move in the stock price after that. But take a look at how the prices have been moving, and in the last 2 trading sessions, it has managed to move above the trend line. So, the red line, that is the trend line, which is at about the mark of 41.60. It closed marginally above it at 41.65, and with that the condition is triggered and the trend line has changed its color. Amongst all the 3 important moving averages, the stock has also for the first time in over 3 months crossed above its fastest 50-day moving average as well, which is another positive indication. The volumes weren't the highest, but we could see further movement as far as the trend indicator is concerned.
Okay, how well has this worked in the past, Yash?
Neither 3 out of the last 6 times that the trend indicator has given a positive signal. On an average over the next 1 month period on a closing basis, the stock has managed to close above 5.5%.
Well, let's wait and watch if IDFC First Bank manages to cheer up a surprise. It's had a decent move, I think, post its results. Let's wait and watch if there is more in store. Thanks for that, Yash. 1 month returns negative 1.8. the last couple of days has done okay. Let's talk full tilt about charts. Amit Harchekar, Director at Index Genius Investment Advisors on the show, as also Brijesh Singh, Senior Technical Analyst at StockAxis. Gentlemen, both of you, thank you so much for taking the time out and being with us. Amit, good morning. Let's start off with you. We might start off marginally higher today. What's the index strategy?
Well, I would be quite cautious on the market at these levels. In fact, market is consolidating around a triangle resistance, which is at around 11,650, 700. So we think if Nifty futures again start sustaining below 11,610, I think that should be an opportunity to open fresh short position in this market. We would suggest a stop loss of 11,750, and we still expect a target of 11,350. Basically, if you see from the entire the broader market direction, Nifty Bank is struggling to retrace beyond 61.2%, and there has been good amount of weakness seen in Nifty Service Sector Index after major breakdown in Infosys. So we believe this market is poised for a decline. But as I said, I will open short positions below 11,610 on Nifty futures.
Let's just say Amit Harchekar is not comfortable taking longs at this point of time. Brijesh, is your view different? Are you initiating any trades on the index today?
Good morning, Neeraj, and wish you and your whole team of the BQ a happy new year from my organization. See, I have a contrary view, no doubt what Amit had said. On the higher level, there would be a selling pressure, but for a very short-term time frame, or I would be precising intraday point of view or a swing base for holding for a couple of days session, I am looking Nifty might try to touch 11,700 or beyond that also. So keeping that thing in mind, Nifty got close on Sunday at 11,627. I'm taking a Nifty spot value. Anyhow, if Nifty trades below 11,615 or in the range of 11,615 to 621, can go long with the strict stop loss of 11,585 and play for the target of 11,675 to 11,680 as the first target, and second target would be 11,720. So I'm looking for this intraday or a quick, for a couple of days session that we might try to touch this level, and after that we might see a profit booking.
Okay. In light of this view then, Brijesh, what are the stocks that you're recommending in the session today? Share a couple of ideas with us.
See, I have total 3 calls, 2 on a sell side and 1 on a buy side. Now, first sell call which I have been looking is a Coal India. Now, the Coal India had a rally from a or 180 to the level of 212 to 215 zone, and after that we have seen a profit booking, and even the oscillator from in the shorter term time frame for the chart followed by the key moving average on the shorter term, they are indicating that we would be finding a selling pressure. So 202 and a half or say 203 the stock got close. So present rate till 203 to 205, if it trades, one can go on a sell side with the stop loss of 212, play for the target of 190. Second sell call which I have been looking is Axis Bank. The same pattern formation what I have been witnessing on the Coal India, the stock had been witnessing with the lower highs formation followed by the oscillator is giving a sell signal. So somewhere around 710 the stock got close. So any rise above 715, one can go on a sell side with the stop loss of 728, play for the target of 695. And only buy call which I have been witnessing is from an IT pack, that is Tata Elxsi. Even on the last show on a feature segment, I have recommended this stock from level of 747. Now on the Sunday closing of the Mahindra trading, the stock got close somewhere around 787. So anything below 780, one can take a buy call in it with the stop loss of 755, play for the target of 820. All the calls which I have been recommending the time frame to hold would be till Friday. And Tata Elxsi, we have recommended to our client on Mahindra trading pick also.
Okay, so those are ideas from Brijesh. Amit, as I look at your ideas, you are recommending selling IndianOpen Bank and buying Sun Pharma.
Absolutely. IndianOpen Bank is one of my favorite stock, again, to go short on a long-term basis. Basically, this is the one stock which has been trading with a long-term triangle support of 1350, and we are looking for a 6 months target of 875. On a very short-term basis, we believe 1325 would be a major resistance, and we are expecting a target of 1170. So we are suggesting again opening up short positions on the opening levels. At these around 1275 to 1280 on the future side. Our second recommendation would be a contrarian buy on Sun Pharma. Here the rationale is, if you see from a 6 months perspective, the stock has been forming a falling wedge pattern, so we don't see further downside from these levels. In fact, any decline towards 380, 385 becomes a good buying opportunity even from a long-term perspective. We have a final target of around 525 from a 4 months perspective. But however, on the short-term basis, the way breakout which we have seen in last 2 days, we easily believe that that the stock could rally all the way towards 465 to 470. Our stop loss for the long positions in the future side would be 397.
Okay, we haven't even discussed, because there's so much of news flow, we haven't discussed stocks like Navin Fluorine, Dr. Alpath Labs, Affle India, Gillette, Spandana, all of which are trading close to record highs. We'll talk to Rusmik maybe about some of these because all these stocks are doing so well. But the pre-open rate's about to kick in. Asia, mixed bag. There's SGX Nifty indicating a start which can be about 20-25 points in the green based on Sunday's close. So let's wait and watch if we indeed have that. But here are the pre-open rates on the first day of the first full day of the new summer. Let me put it that way. All over the place right now. Let's give them a chance to stabilize and then we'll talk more about them. Let's bring up Tata Motors. Let's stick to stocks. 2 or 3 names which could be showing some reactions. For now, Tata Motors muted compared to Sunday. Let's wait and watch if there is more in store. Bharti Airtel has this unnatural 9% downtake. It will get corrected. There's no reason to really panic about what Bharti Airtel has done in terms of deferring the results. Seems to be, from the looks of it, a very normal thing that they have done because they need some clarity on a couple of issues. So I doubt that this will be a reaction, but you never know. Let's wait and watch. If it does stay this way, we'll talk to Rusmik about this. PPCL, Prime Minister Modi in Saudi Arabia, and a lot of people that I spoke to yesterday were trying to put 2 and 2 together and believing that, you know, the trading community would look at BPCL with renewed interest. Let's wait and watch if that happens. And Reliance Industries is the other one. I do want to see they have developed a new structure of sorts. Maybe a bit of reaction already happened on Sunday, but let's see if there is more in store, 1450 or thereabouts. Let's wait and watch if that happens. And then at the broader end of the spectrum, again, I repeat, a lot of the reactions happen in the 1 hour of trading on Sunday. We don't normally see that, but we saw that this time around. And therefore, we may not have dramatic reactions in a lot of stocks, but, well, maybe an InterGlobe Aviation or some of the others could be an interesting ones to monitor today. For now, Indigo showing some downticks. The DGCA has told the company to replace some A320neo engines, failing which the aircrafts will be grounded in 15 days. Let's see if InterGlobe Aviation has some reactions to this piece of news or no. Citi has upgraded NMDC. Maybe that stock would be an interesting one to monitor as well. And there is a Mint report on Shriram Group companies, so Shriram City Union Finance, Shriram Transport Finance, maybe some merger out there in order to get some structure clarity. Maybe these stocks react in the session today. So let's wait and watch what happens to some of these. The currency and the bond yield should come up on your screen very quickly. Let's see what's happening there. The currency, 70.74, some bit of strengthening there, and the bond yield should come up on your screen as well. They've been largely stable. I don't think the bond yields have gone up or down too much at about 6.5 when they've stopped reacting, frankly, to most announcements. But take it back to our guests, and Rusmik Oza now on the fundamentals still with us. Rusmik, a clutch of these new age names are hitting fresh highs almost quite recurringly. They're seeing an up move and they're seeing some fresh buying there. Affle, Polycab, Spandana Spurti, ICICI Lombard, a clutch of these names. Any of these within the coverage that you guys are still optimistic on after the run-up that we've already seen in some?
Yeah, Neeraj, we cover Polycab, where we are still very positive because the company has a very good franchisee in the cables business, and slowly and steadily, you know, they have been increasing revenues and trying to actually create a little B2C business also. That's one company I think has got good brand value in the space and has been growing exceptionally ahead of the peers in the industry. So that company holds a lot of promise going forward for us. That's one company we are quite positive on. Spandana, Affle, we don't cover these companies. But the last name which you mentioned was?
So there's Spandana Spurti, there is Affle India, which has also done very well, and in ICICI Lombard is hitting fresh highs too.
Yeah. Yeah, ICICI Lombard, we have a coverage, but our view is a little negative on that stock because in the last 1 year, because of the regulatory changes and a jump in premiums, there was lumpiness and earnings and revenue shot up very sharply in the last few quarters. Maybe the base effect will play out going forward, and to that extent, valuations are quite rich in that space. So I think post life insurance, people saw that they've missed out a lot of things. So people have lapped up on the general insurance space also. But a caveat over here is unlike life insurance, general insurance has some inherent risk in the business model, because in case if you have any calamities or any other damage, then most of these insurance companies are liable to pay out. And the stickiness in the general insurance is not there as compared to life insurance, because say for example, if I have a insurance in the car this year, maybe I can change next year depending on who gives me the best offer, which is not the case in life insurance, where stickiness of a product is there for years, and so that's the reason why we're not very optimistic on the general insurance business as per se. And most of the stocks after the run up are quite expensive in terms of valuation as compared to the life insurance companies. So that's one. The other names we don't cover, so I cannot make any comment on them.
Bharti Airtel looks like it will start off lower, though. I didn't quite anticipate this, but looks like it will start off about 5.5% lower. Rusmik, they've deferred the results because they want some clarity on the amounts regarding the AGR, so on and so forth, and therefore the results deferred to November 14th, and the stock is showing a downward reaction of 5%. Warranted, you reckon?
I think this is quite a serious issue. The amount involved is pretty huge, so it could impact the entire DCF valuation completely. If they end up. So, but I think we'll have to wait out, because I think the Idea Vodafone have filed a petition in the Supreme Court. So probably we'll have to hear out the final verdict. So that's little uncertainty, gray area. Maybe because of this petition in the final hearing, I think they could have deferred the results. But one shouldn't be too pessimistic on the telecom space, because I think somewhere we cannot afford to have a duopoly kind of a situation. It has to be an oligopoly market where you have at least 4 serious players, so that competition is quite healthy in this sector. And I think somewhere the government also probably might look into this aspect, and that could be one thing one should keep at the back of the mind. But yeah, I think Bharti, any correction one can look at actually adding, but then maybe depending on the final verdict, if the companies do have to pay this amount, then it could be there could be a cut of around whatever the DCF pricing could change dramatically because of this outflow. And again, most of these companies will be finding it very difficult to fund their acquisitions going forward, and the debt to EBITDA could again shoot up quite substantially. It's come at a very wrong time when things were just likely to improve, and we were seeing some bit of pricing power coming back post Jio hiking tariffs. Things were looking quite optimistic, and this jolt has come in terms of from the Supreme Court. So I think it's little 50-50. We'll have to wait out and see. But yeah, I think so. If the stock's correct meaningfully 10% from the peak, then investors would again look at Bharti from an investment perspective.
Well, it's recovering some bit of lost ground on unexpected lines. I was really surprised at the 9% drop. You can have a 2% drop, or because of the market believing that, oh, why did the results get deferred? But 9% was unwarranted to my mind. 2.5% currently. Let's wait and watch if there is more in store. A quick technical perspective though on a couple of these stocks which have corrected. Brijesh, I want you to come in on InterGlobe Aviation, starting off another 3% lower. What do the charts indicate here?
It's been showing a negative sign, Neeraj. Stock had been corrected from a level of say somewhere around 1900 mark, and roughly around, and it should have not broken the 1700 or I would be saying 1590. So it's been trading below this level. So I'm looking till the stock doesn't give trading above 1590, any rise or percentage should be used to going short. Now on the downside, if I talk about stock has a support somewhere around 12 100 to 1220 zone. So we might try to see in coming days, most probably in the next November series, that the stock might try to touch this level of 1200. So any rise should be used to going short till stock is not been trading above 1590 on a closing basis.
Okay. Amit, Tata Motors 16% uptick Friday, 3.5% today. If you are a short-term trader, would you go out and buy it this morning at 152?
Absolutely, I would buy Tata Motors on every decline. In fact, even at higher levels, I would be quite comfortable.
The
whole rationale what we are pointing out.
I have a specific question, sorry, not a decline, because it's not showing the sign of a decline. If it starts off at 152, would you buy it at that price?
Absolutely, I would buy it even at 150 to 155 zone. As I said, we are looking for a pound target of 105, and we believe that would translate into a price target of 225 to 230 on Tata Motors. So we are quite optimistic. If I want to keep a stop loss, it would be at 125 on a positional basis.
Okay, so yeah, so I just wanted that answer, and which is why the interruption, because it's important to get a sense from a short-term trader's perspective at whether 151, 152, it's worthwhile to buy Tata Motors or not. Rusmik fundamentally believes it's a good to buy. Amit Harchekar, from a technical perspective, even for a short-term trader, believes that at 152, it's good to buy Tata Motors. Wait and watch. The commentary has looked very, very strong on Tata Motors in the con call as well. So very, very important to monitor that. Minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, watch out for institutional reaction to Tata Motors. As I said, ICICI Bank and Reliance Industries, after thin trades during motor trading session, took all the stocks higher. Bharti Airtel has deferred the board meet for approval of Q2 results till November 14th. The company says it needs more clarity on the average gross revenue after the Supreme Court ruled against the telecom operators. In earnings today, keep an eye out for Hindustan Zinc, Petronet LNG and SKF India as they come out with numbers later today. BPCL remains in focus as Prime Minister Modi flies to Saudi Arabia on a two-day visit. Markets will be watching out for a potential deal or announcements thereof. Indigo may risk grounding of 16 A320neo aircrafts if it does not replace the engines. The aviation regulator DGCA says the replacement must be done within 15 days. Lastly, Shriram Capital is planning to merge subsidiaries Shriram Transport Finance and Shriram City Union with itself. Such a move could be taken to help Piramal Enterprises sell stake in their group companies, according to a Mint report. Okay, a quick perspective. Amit Harchekar, on two specialty chemical names that have done well. I want a quick answer here if you can. Navin Fluorine at new highs, Deepak Nitrite at new highs. Would you trade either of these two stocks?
Well, out of these, I would prefer Navin Fluorine on a decline. I would be not buying it at 900 levels, but in case there is a dip towards 875, it becomes a buy with a stop loss of 850 on a closing basis. The entire breakout we have seen after since December 2017, it projects a target of around 975 to 1000. So that would be the area I would be booking out.
Okay, so watch out. Amit Harchekar prefers Navin Fluorine or Deepak Nitrite. Rusmik, any thoughts on these specialty chemical names, all of which have come back into the fancy? They were always in fancy, but now hitting new highs. Do you have anything within your coverage universe?
We don't cover the names, I think so. I've been attending the con call of Deepak Nitrite. It looks quite interesting because this year the growth is coming from its phenol new capacity which they've set up, which is running at full capacity utilization as of now. And going forward, I think they have been talking about creating a lot of derivatives out of this phenol business, which could be value-added products, and the next phase of growth could come in from there. They have ability to expand capacity with the new facility set up in Dahej. So I think Deepak Nitrite could be an interesting play going forward because valuations are quite cheap. The kind of ROC, ROE it generates is quite healthy, and it could remain in focus going forward. Something like Aarti Industries, because of the way the company has shown its ability of execution and running the plant within a year at almost 85-90% utilization. A commendable thing, which I can say what we've seen in most of the specialty chemical names.
Okay. Rusmik, always a pleasure having you more so today on the first day of the new Samvat. Thanks so much for taking the time out and being with us.
Thanks, and have a very good Samvat 2076 to everyone, including viewers.
Yeah, thanks so much, Rusmik, for that. Well, The start doesn't seem to be all that bad. We might have a flattish start, marginally in the green. In light of that, what are the top stocks that both our experts are recommending today? Brijesh, to you first. Your top call for the day today. One top stock that you would trade today.
Go for sell call with Coal India at 203 to 205 zone with a stop loss of 212. Play for the target of 190.
Okay, so Coal India, a sell call on Coal India is Brijesh's top call for the day today. Amit, what about you? Your top call for the morning?
I would continue with Yes Bank. I would suggest buying a 45 strike November put options, which is trading at around 3.7. The implied volatility has moved up beyond 130% for this option, and if you see the total borrowing to market cap for Yes Bank, it is trading at around 34 times. I think similar to what happened in Lehman, so quite negative on Yes Bank. I think this becomes the put of 45. We expect it to trade around 10 to 12 rupees in next few weeks.
Okay, so it's a buying the put option of Yes Bank. Amit is negative on Yes Bank but doesn't want to trade via the futures route, wants to trade it via the options route. I must say the stock has surprised a lot of people. Gentlemen, stay on. We'll just take a quick opening thoughts from you. But here's how the markets are starting off for today. The first full trading of the new somewhat flattish, marginal tinge of green, about 14 points for the Nifty, 0.1%. Very flat for the Sensex as well, just about 33 points. The Nifty Bank nudging between the red and the green. Right now in the red, 27 odd points, but it's a very flat start. I'm guessing the mid caps and the small caps also have that, and which is why it's important to get the heat map up on the screen, because it's very stock specific, I reckon, in the session today. Let's see what's moving. Tata Motors, another 5% today. Big move. After that 16% move, a follow through. I think in technical parlance, this is considered to be a big positive. We'll ask our experts, but 5.5%. Vedanta up about 1%, TCS up about 1%, Reliance Industries up about 1% as well. So good going there. There is strength in JSW Steel, Hindalco, BPCL, and even Stevens between the red and the green, because there is equal number of red and green in the session today. So if Tata Motors is up 6.5% and doing well, what is not doing well? Bharti down about 2.8%. Yes Bank a couple of percentage points lower. Dr. Reddy's is down about 1%. Kotak Bank is down about 1%. Ultratech is down about 1%. Axis Bank is down about 0.75%. Don't quite see the HDFC twins. They're lying very, very flat. But this is the nature. Bharti Airtel on one side, on the downside. Tata Motors at the other end, on the upside, doing well. What about the broader end of the spectrum? Some stocks that come top of my mind, I just want to mention some of those. So if Tata Motors is doing so well, I reckon the DVR too should be up and active. So watch out for both Tata Motors and Tata Motors DVR. They are in focus today. Tata Motors DVR up about 6% as well. So really good going for this one. What about Ujjivan? That's a stock in focus. It's down about a couple of percentage points on the news flow about the RBI putting out some statements with regards to Ujjivan Financial, and that stock starts off lower. Then the stocks which have been nudging new highs the last few days: Navin Fluorine, Dr. Lal Path Labs, there is Affle India, and well, Dr. Lal at least starts off in the green. Navin and Affle marginally soft in the session today. Affle India about 1.25%. Also some of the others. There is ICICI Lombard, Spandana, Gillette, but all of those two start off marginally lower in trade. So those are a few names that one should be watching out for in the session today at the start. But can't not help but talk about what to do with some of these specific names, and we've discussed Tata Motors enough. The Tata Motors DVR should also be the other stock that you should monitor, but Reliance Industries is the big one, isn't it? And Brijesh, quick thoughts out here. Reliance Industries as a trade, would you go out and buy that one?
See, no doubt, Reliance Industry has crossed the previous swing high of 1441 or 1442, but I'm not looking stock crossing 1465 or say 1470 band. That would be the tough resistance to cross. So I would be a little bit going on a contra call. If it trades somewhere around 1450, one can go for a sell side with a strict stop loss of 1465 and play for the target of 1430 or even 1410. And the time frame to hold would be till this expiry.
Okay. Amit, Harchekar, quick view. Mahindra and Mahindra about a 1.3% higher. Would you buy it?
Not really. I think the stock is into a long-term downtrend. In fact, towards 600, it becomes a good shorting opportunity. Stop loss would be 625, and we are looking for a target of 530. There has been a good negative reversal which is visible on RSI front. So I think we believe this pullback should get completed around 600 zone.
Okay, Jaman, thanks so much for taking the time out, and happy trading for the new somewhat.
Yes, indeed. Thank you.
Well, those are our technical experts for the day. Let's get the big market voice. Harsha Upadhyaya, Chief Investment Officer for Equities at Kotak Mahindra AMC. Harsha, good morning. And from all of us out here at BloombergQuint, I wish you and your team a very happy new year.
Happy New Year to you as well as your viewers and the entire BloombergQuint team.
Thanks, Harsha. Is the stage set for it being a happy new year? While the Nifty gained 10% in the last somewhat, the broader markets had not, though the quality names did gain. Can the perceived value names make a comeback in the new somewhat?
We clearly are of the opinion that the broader market offers much more valuation comfort as compared to Nifty or the large cap basket. Our view is over the next 12 months, the broader market could give much better returns than the large cap indices. In light of this, even in our portfolios, wherever the mandate allows, we have been building some positions in mid and small caps. Obviously, it's not been across the board buying of mid and small caps because there are still issues in some of the companies where leverage is very high or where there are management issues. But overall, I think if you spend time, there are good enough opportunities that can be explored in the mid and small cap basket, and that's what we have been doing across our portfolios.
Harsha, the talk of town, of course, is what's happening to autos, and difficult to say if the bottom has reached or no. But 3 months ago, I remember so many people coming out and saying the contrary and saying that the fundamentals may not be in place, the prices were in place. We've seen some rallies there. Yatin, our head of research, was telling me that all the 5 large companies that have come out with the results thus far have beaten estimates. The commentary around the festive season sales is strong. Is this sector showing some signs of bottoming out, or is it too early to say?
I think to take a sector-wide call in autos is still some time away. There could be some stock-specific opportunities. The festive season feedback has been mixed. I don't think it's been great across the board. In some cases, the valuations have also moved up quite considerably even before the fundamentals have turned up. So to that extent, I think you have to be stock specific in that segment. And our view is rather than looking at some of these consumer discretionary names, maybe if you focus on industrial, cement or engineering, which is the other part of the economy, the relative valuation comfort is much more. And as economic activity picks up, some of these sectors and stocks could give better returns than consumption-oriented stocks.
Interesting. But wonder if you believe any one pocket within autos, a sub-segment might be the one to be interesting to monitor. I mean, four-wheelers, two-wheelers, tractors, what have you, or maybe even some auto ancillaries, because while autos have moved up, I haven't seen the ancillary names make a move thus far.
We believe that within the sub-segments, two-wheelers offer better valuation comfort, and also two-wheeler market has been a lot more resilient than four-wheeler market. It is less discretionary in that sense because it's become a necessity to have two-wheelers in many of the smaller towns and even towns where the public transport is not great. So to that extent, two-wheelers is something that is better positioned today within the auto basket rather than four-wheelers or auto ancillaries.
By the way, Bharti Infratel is now the top loser yet again, down another 3% at 206. In the last 4 days, it's lost 20% of its market cap. You got to keep that at the back of your mind. Harsha, 2 questions, one local, one global. Firstly, the global question, and I'm linking some commodity names out here, but what's your view there? Every single big issue in the last 12 months has finally reached a good resolution, be it, I mean, 12 or 16 months ago or 18 months ago, the North Korea-US situation was the talk of town. It got resolved. The China-US situation is not looking as bad as it used to. Brexit, there is some extensions coming in as well. Would you believe that because things are getting resolved or they're not really deteriorating too much, it might be a good idea to maybe look at some of the globally linked names as well, because the prices might be in place. We did a small analysis of what metal companies typically do, and these are around the valuations from which they have turned back in each of the last 4 down cycles. What is your view on the globe situation, and thereby would you take a view on the commodity names?
Global macros have been quite supportive for India for quite some time. It's been local issues which have been actually been worsening, and that's what has led to a choppy market. We believe that if you look at interest rates or liquidity that is available in the global markets, they have been supportive to emerging markets, including India. Commodity prices have been down, especially oil, which means that from an economic standpoint, it favors India. Yes, as you rightly said, the valuations in the metal sectors or some of the other global commodities have come off quite sharply in light of concerns about global growth as well as what's happening between US and China in terms of trade tariffs. Overall, we believe that there could be some opportunities even in the metal segment. While we are not going overweight across the board, there are some specific ideas that we are working on and where we have built some positions in the last 6 months.
Interesting. Okay, so that's the view on some of the commodity names and the global situation. Harsha, back home, I was thinking back over the weekend at the commentary that was provided by State Bank of India. Now, a lot of skeptics will say that they've been talking about good times coming for a number of quarters now. This time around, even the numbers showed some glimpse of hope. The other banks haven't sounded all that negative either. The corporate-facing banks, do you reckon that fundamentally too, things could now be turning for the better?
Large corporate NPA cycle seems to have bottomed out, but at the same time, there are some expected risks that will come out of the mid-market or the SME segment, which is what one needs to watch out for over the next couple of quarters. And also the current ongoing NBFC credit freeze has also had some impact on some of the NPAs or the assets in the banking system. So to that extent, these will be known only in the next couple of quarters. But for the large corporate NPA cycle, I think most of the negatives have already been priced in, and also it seems to be bottoming out gradually.
Okay, so watch out for that pocket as well. One final question, Harsha, and that is on what has been a consensus view with most market participants that I spoke to on the Diwali shows, and almost everybody single-handedly seems to be very bullish on the divestment theme or the divestment moves that the government has come out, and people are bullish on some of the companies as well, even after the run-up that we've seen. What's your sense? It's a bit of an unpredictable situation. Would you go out and put in some money to work in that pocket?
We already have some investments in the PSU space, and that's what we have been continuing with. We have not added any further weight into some of these names post the disinvestment plans or the privatization plans that have been announced. But our view is, even if you take one of these privatizations and get it done, then the entire PSU basket can give you better upside, and that's what we are hoping. And we do have weightages across our portfolios in the PSU space, and hope that at least one of these privatizations will go through over the next few quarters.
Okay, well, it might set the stage for some of the others as well. Harsha Upadhyaya, I take a moment to thank you for joining in today and giving us your perspective. Really appreciate your time, and a Happy New Year once again.
Thank you so much. Have a good day.
That's an important market voice, Harsha Upadhyaya of Kotak Mahindra AMC, with his thoughts on specific buckets. Selectively bullish on autos, bullish on some of the metal names as well. Do watch out. That could be an interesting pocket over the next 12 months. Well, we'll talk about some of these pockets on the other side of this break, because a special chat with Madhusudan Kela of MK Ventures on making sense of the volatility in Indian markets. Stay tuned to BloombergQuint Live.